Welcome to tonight's report. Today is September 29th, 2013. The time is 7:25 p.m. Eastern Standard. We have an event here on the S&P 500 mini futures tonight. Gapped down significantly on the brand new overnight session. It just opened up at 6 p.m. Eastern Standard. Has gapped way down. And because of it, we are now at a short level 8 on a smart money bias market trading call side. Again, an event tonight. We are now at a smart money bias market trading call short level 8 because of the significant gap down on the S&P 500 and mini futures that we'll get into shortly. You know, and this is another reason why we use both of these markets in order to be able to make a determination about where these prices are going backed by the smart money. Here it was clear for those of you that were with us on the report for the night of September 20th. This smart money came in, it was going to play itself out one way or the other. On the 23rd, only 2 trading days later, we called the market to go short. And ever since then, it has successively, day after day, traded to the downside with substantial momentum. Now, as we look at the levels that are left that we have laid out on the Dow so far on the equity side, here we have a current resistance level on this index at 15,381.36. To the downside, support still stands because we need 3 closes below this level at 15,312.86. Below that, right here, broadcasted out as 15,194.13 on support. And the lowest level that we're reporting tonight right now is 15,194.13. These are the areas that prices hit as they move down, as they have been established to the upside. The low of the most recent session has almost hit 15,194.13. And because of the gap down on the futures, I have no doubt that that will be hit on tomorrow's trading session, if not more. Let's get right into the indicator formations. More momentum to the downside across the board here. More downward movement from the SMI. More downward movement from the exponential moving averages here as they have crossed, and the disparity, the difference between these two, continues to widen. Here, more downward movement after a short-term peak, right after the trend line violation came into play right here. This was one of the things that helped me make, in part, the decision to call the market to go short. By the way, that video was uploaded to YouTube. So for those of you that are new to us, and for those of you that are seeing this report for the very first time tonight, that is the undisputable truth, as it has to be posted, and that date cannot be manipulated. Here as we go forward. We now have the cross from the MAC, the indicator, in a very slight manner, but the cross has been made by the down close on this index. The numeric value for Friday session was 15,258.24. Here bottomed out on the advanced decline oscillator. More downward movement from the Chaikin money flow from a longer term perspective. And that gets us right back to the levels that everybody should have marked out for the upcoming trading week. The sectors and the ETFs traded against them here on 25 consumer discretionary and the ETF symbol XLY. We have a repeat of the most previous smart money bias call of a possible trade out if the market moves up. And at this point, that doesn't appear that that's going to happen. So we were smart to stay with the short position, because with the amount of negative relative strength that the market has as compared to this in particular, there's no reason why this shouldn't move down unless, for whatever the reason, the U.S. markets will find 25 consumer discretionary as defensive in nature. Here, taking a look at 35 healthcare and XLV, we continue to be short here with a good trade in play. And as we move forward here, 55 utilities and XLU on 8/29, tonight's report, we likely have a short trade-in on the AM session. And why? Because we finally got out of this pattern here that was established by these most recent prices within the last 9 trading days. And here on 45 Infotech and the ETF symbol XLK, likely to be short again on the AM session. The gap down is obvious here. What can happen in this case is a price profit target established here and then here. If we have a major market sell-off, which could be what it's in the works for Monday's trading, this, although the volatility has been so high and we've stayed away, could be a play to the short side. And here, just an excellent trade identified by our smart money trading methodology on 30 consumer staples and XLP. We continue to be short. Nice trade in play. Closed down here at 435.91 for Friday's session. Here on 15 materials and the ETF symbol XLB, likely short on the AM session here, getting through some resistance level here. If we have the sell-off again on the market side, that appears to be in the works. We're looking to get to here and then again here. On this, for 50 telecom services, XTL will remain short again tonight, closed down at 149.49. This was a beautiful move that we called from here to here. I'd like to make mention of the fact that there are a lot of people who are looking for official calls on services, exactly where to be in and where to be out in the form of just a straight out call. If you don't understand a trading methodology and you're looking for calls, then you're taking calls blindly. I think one of the most important things that a trader at any level can do is understand how to incorporate the market analysis into anything that they want to trade. It all begins with understanding where you stand every day within the market. Now, even if you're looking for something that gives real-time calls on anything that you want to trade, beware. If you don't understand what that methodology is about, you're rolling the dice in Vegas, and that is not a true high probability trade. The way to get in this business, the way to stay in it, the way to mitigate the risk and maximize whatever you can make is to understand what you're dealing with. And then when you trade, whatever you trade, after you learn how to analyze the markets, is do it based on the true high probability trade selection. This is one of the greatest pieces of advice I'd like to give anyone out there, any place, anywhere in the world who's listening closely tonight. Here we were long, out here short now on industrials, and this appears to be probably the best entry that we could get based on the current market conditions. The markets continue to trade down, and I feel that's a certainty for Monday's trading. Now, at 434.49 right here, we have a clear-cut price profit target here, and then again, obviously, all the way back down to this point at around 405. So those are a lot of points to pick up. It was not only about a week and a half ago we picked up over 100 points on all the long calls that came in, getting in and around this area and out here, and you can see them here. All the accumulated points that came in was one of the best official accumulated point gains that we have ever had besides this here on the nightly market intelligence report with regards to the ETF selections as pegged to the S&P 1500 sectors. On again, 40 financials getting back to here on XLF. That's it. We are short again tonight and will remain short as these prices continue to move down. Let's get into the futures here. I'll show you exactly what we're talking about with the incredible gap down that has just happened in the new overnight session. The year month traded December 2013. Here it is. And this was my major decision in going from a level 7 to a level 8 short tonight when I saw this. Here we are. Look at the distance of the gap from the last session's close to the new overnight session open right here. Incredible. What a spread. Now, as we look at the levels that are laid out, support at 1678.25 is right where prices are hovering just about right now. I expect some recovery to come back in. I don't know if this gap will ever get closed because of the distance behind it. This remains to be seen. Now, as we look at the next support level to the downside, it is 1664.75. That is the absolute level. If prices completely tank between the overnight session, even from a greater amount of smart money coming in the form of distribution, and tomorrow's equity session slams down, it is highly possible these prices could move all the way down to 1664.75. That is a real possibility for tomorrow's trading. Now, looking at the indicators from this end here, we have more negativity to the downside versus the equities. More on the SMI, more here on the MACD, more on the MAs, more in the shaken money flow, and back to the levels here. So in real time, let's talk about what happened on the last overnight session coming in from last Friday's trading. We had an excellent short move. And this is something that I wanted everyone to see, because as we're trading down, some of the indicators will be in oversold territory for quite some time. There is a direct relationship between what is possible based on a particular indicator in mind and where we have price profit targets laid out and where we have a real possibility to get in after an excellent chart pattern set up. Chart patterns are critical to trade selection. When we talk about chart patterns, all this volatility is a lot more difficult to trade than, including this volatility right here, is a lot more difficult to trade than something of this type of nature. This formation here is what we really want to look for when we have an opportunity to catch along our short move. Excuse me, in this case, it was a great short setup. There was a lot of room to go on the MACD side, and this is what I want to reveal tonight. As we look into the past, at this point, the MACD indicator was right here, clear to be short. We had a level here and another level here within the most recent trading days, and here that I've laid out for you. At the MACD had distance to go to get back to, just like the prices as we see them lay themselves out on the way up, we have clear-cut price targets to get back down to on the way down. This area broadcasted out into the future. It was and becomes, again, another price level for prices to get magnetized to. And so there's your setup. There's a price profit target. As you go through, you'll see the other indicators are in oversold territory. EMAs were not. Most of them were here at this point and here and so forth and so on. So there's what we look for on a stair step down when a market is trading down. Now, to get into the stats for the trade, here we are where we had a level set out. And let's show it to you one more time at 1690 right here based on this pattern that had to get penetrated from above to below. This broadcasted over into the 1 minute chart here. The actual entry came in to be just a little lower than that. Here's your gap down. Here's the volume that comes in. And again here, right when the gap down happened. And this is why, getting below this level, I was in here at 1690.50 at that level. 30 lots, 3:22 a.m. Exited out right here. Right as prices trade up, when a lot of volume came in, I thought that that was it. And it wasn't for that moment. Prices traded down a little bit lower, but not much. And the hold time on this trade was long. So for me, that was enough. And out at 5:31 at 1686.75. So for Friday's overnight session, before equities opened, here we are picking up 3.75 points. Times $50 for a full point move gain in this market was a net contract gain of $187.50. Times 30 contracts traded is $5,625 net dollar gain on this particular trade. An extended hold time paid itself off. And why? Why the hold time? Because the market is in a strong sell-off mode, not net neutral. That's it for tonight. Once again, welcome all new subscribers from overseas. We have a few people that have come in from, one from Singapore, one from Russia, and one from Italy. So welcome to the Inside Technician, and we'll see you again tomorrow on the next report. Good night, everyone.